Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer. Going to give you another lesson in Fibonacci. And we're going to be using two different methods here. And it's basically, these are thought experiments, okay? They're not, well, they could be used as trading technique if you wanted to, because we're always looking for low risk entry. And, you know, this is a pretty decent way of doing it. But I'm combining two things. I'm going to be combining trend lines with Fibonacci. Now, when I was first introduced to the idea of price projections, it was by a gentleman by the name of Roger White. He was a trader that had traded for himself. He traded on the floor of the commodity exchange. He was in New York, but he basically traded futures from his New York office, and I was fortunate enough to become friendly with him, and I read about him extensively in the emails that I sent. He was one of my mentors that I basically sought after because I was getting my butt kicked. I mean, without any type of professional techniques and without having any idea of what I was doing in the market. I was like a net loser without my customers. So without further ado, let me explain to you what he said to me and what he made me do. So I think it'll be good for you to basically do the same thing, to try to get relationships down. What he asked me to do, what he basically made me observe was a bisected marketplace with a line separating, by equal amount, or it won't be exactly equal, but what we're trying to do is we're using a trend line to bisect a market from a low to a high. So basically, if I'm looking at this market right here, and I have a low, and I go up to the extreme high that I have recently, if I take the low and I go up to the high, I have a line that's bisecting the price action that happened all throughout this market movement. Now, what he said was that if you notice this line itself, okay, going up through it, it seems to have some type of magnetic quality, whereas the marketplace will come back down, come back up to it, come back up, back down, constantly use this line as a means of repelling price and or the market basically gravitating back up to price. Now, all well and good, but as we see, the marketplace did break down and get pretty far away from this line. And if this goes out into infinity, it's going to be, not really useful anymore. So we have to constantly keep adjusting this line. Now, Andrew's pitchfork does something very similar to what he was talking about here. Okay, you had a median line inside the pitchfork that basically act as a magnet. If the market, broke the median, it was going down to the lower part of the pitchfork itself. If it broke that, then you'd had extensions off of it, just like Fibonacci. So this is like a precursor to like a pitchfork analysis that I got the idea from one of the people who are watching the videos. He's a pitchfork guy, which is great. I mean, I studied Dr. Alan Andrews. It has a lot of good ideas here. And when I was thinking, going back in my notes, I said, you know what? Roger Wright was like talking about something very similar to this. Now, this would probably be the range would probably be outside of the pitchfork. So if I took a low here, a high, and then a low, my pitchfork would be running parallel to this really good high price. But the low price would be, a little bit higher. The three, actually, I should see if I have a pitchfork in here. I don't really use them. So let's see if I can find one. Yeah, I got a pitchfork fan right here. Let's see. So the pitchfork would say you use a low, you use a high, and you would use a low. Basically, it's coming up with the same trend line that I have. Here was this point right here was the meridian line, right? This, let's see if I can change the colors of this thing. I don't know. Oh, that changed the color of the whole thing. But anyway, this point right here is coming off it. Right here is your meridian line. Market didn't really touch it, but this is my purple line. So it's very similar to pitchfork analysis, but let's get rid of this thing. We don't need it. So what I want you to do on your chart is I want you to take a low, go up to a recent high. Now, this line is basically what would be considered kind of meridian line, right? But off of that line, we're starting to see the market develop a support line. Now, if the marketplace was going to continue higher, it basically should come back down to the support, come back up through this, back up to this vector, and then back down, and then finally break up through the vector. And then we'd have to readjust our line again to get the same type of magnetic line, if you want to call it that. But for this lesson, it's basically saying, okay, look, we have our original line that we drew. Now, how can we use Fibonacci to determine a price low based off of this? Now, I go over this extensively in Forex Confidant, the course. There's a lot of techniques we can use, but the simplest one to use is we redraw another support line right here. As you can see, I'm connecting this demand point to this demand point, and it's just going out into the future, okay? If I take the high, which is 175.52, and I take the value of the line, which is 170.55, I come up with 497 points. Now, I want to multiply. I'm sorry, the high is not. It's 172.52. 175. I don't know where I got that from. And then I take the value of the line, which is 170.55 out. I get 197 points, 200 points. I immediately could say, okay, if this marketplace, where would be support? Where would be a Fibonacci support? Well, 100% would be 197 points off the value of the trend line, not this top, the trend line, okay? Because 197 points is going to just bring me to the trend line. So what I'm doing is I'm saying, okay, so 197 points from 170.55, let's just go 200 points out. Brings me down to 168.55. That's 100 points. Close enough. 168.57, 168.55 is a price projection. If the marketplace was going to go lower, now we could start using 1.382, 1.618, 1.82, 2, 2.23, and so on, 2.236, and so on, okay? But this is giving us a price projection of 100 down at this area, okay? Now, you could have also done the 0.382, the 0.618, the 0.82, and there's your 100%, right? Now, how do you use this? Well, you're basically saying, okay, I got a Fibonacci calculation off of the trend line. So that point right here, this point is a good position or good chance to take a buy off of, trying to get back up to the original trend line, this trend line, the support line, because that's going to act as resistance, and we're going to have to readjust. We're going to have to readjust our line once we do find that. So look at this. So we have this line, this old support line has already predicted that price high. Now, of course, it didn't go. Now, I would have to do the same thing. I'd have to draw another support line underneath. Why it's not letting me do that? Oh, I'm in drawing mode. Unbelievable. I got to really learn how to use this thing. Trend line. So now I have a new trend line from this demand point going up, connecting to that demand point. And I'm basically finding the next line to do the same thing out of. So this now has to be readjusted. Okay, or this line is now dead. Hang on, unlock it. And we're going to start over again. We're going to go from this point low, connect to that point high, or from this point low, connecting to this point high, doing the same thing. Okay, so now we have this against this, and as you can see, you can keep moving forward. But the most important thing we did was when we took that level off of the original bisected line, and we used the trend line, we could predict basically how far our market could go. Now, nothing's perfect. Could it go lower? Yeah, absolutely. But that's the next level, the next fib level. If it broke below this, it would be going lower to the next fib level, which would be the 1.382 level. Then you could take another look there. So what I'm not going to give you in the video is a system to do this. You may have your own. You know, here's the area. What do? You know, there are a lot of people that go, okay, well, here's my low. I'm going to buy the break above this high, put a stop above that low. There's many different ways you can do it. You could look at the fib wave, you know, short-term fib wave. I gave a video out on that. I suggest that you check that out. So I hope you find this video interesting. You know, this stuff for me is fascinating. It really is that how much of a relationship there is if you know where to look for them. And Roger White gave me the ability to start looking for the relationships. If you don't have this, and this marketplace is falling, and you have no idea like where I have a support level, because there isn't real, I mean, other than this level, this demand point here, but maybe you're thinking that this marketplace is turning lower. And guess what? You just got punched right in the nose. Marketplace turned right around. The hardest trades are the best ones to take. Look forward to seeing you in the next video. Cheers.